Hey everyone, welcome. Good to see you guys. Hope you had a great day so far and had some nice profitable action in the markets today. Let's Before we get started, we'll just remind everyone if you want to be part of my public Telegram channel, that's it right there, thetradingpub.com/Kane. That'll take you to the link to sign up for it. There's all sorts of goodies, like mostly the gamma levels, the daily gamma levels. Did I send one out today? I might have blanked on sending it out today. Let me see. I might have. Oh no, I did. I did. Okay. So over here we saw, for example, early in the morning we saw a very polar, divisive gamma action, suggesting that we could either go down or go higher, with SPY suggesting 670, and puts were definitely in control today. So 670 was the favored movement, and you can see it was indicating 670 on SPY. I'm pretty sure that's pretty close to where we ended today. Let's take a quick look. We ended at 671 point. Okay, so a little higher than that, pretty close to the end. Maybe half an hour before we were right at 670, but we did float upwards. But still pretty good, within 1 point on the S&P SPY. That's pretty good. Quick reminder, also that's my only public Telegram channel, and this is my only YouTube channel. So any communication that you might supposedly get from me from anything else other than the emails that come through the publisher, those are 99.9999%. They're going to be scam emails. So don't fall for them. Don't send anyone any money unless you are purchasing an official program through the publisher, through one of their official links, or you're calling into our US-based customer service team. Then don't send any money. And all the people who are part of that sales team and the customer service team, they all speak perfectly English. They're all US citizens. They all are US based. So if they sound funny or they're really pushy or really rude, just that's not us. Okay, they're not the real deal. They're just trying to scam. Okay, hey James, hey Tim, TP, good to see you. Maggie, Peter, and Steven, great to see you guys. And thank you, TP. Yeah, thank you for letting me know that I did send it out. I'm still a little out of it from yesterday. I'm feeling much better, but generally what happens, I very rarely get sick, but I do kind of get to the verge of getting sick. And then that's my signal of hey, I need to take some rest and recover a little bit. So I'll be doing that over the next couple of days just to make sure I don't actually get sick. So S&P just floating along. EMA 8 is still nicely moving up. These lows are still, for the most part, getting higher. The highs still, for the most part, getting higher. So this bull market is very much intact. It's not surprising. It's not concerning that we come and we touch the EMA 8 every once in a while. So we're still very bullish on the market. Not a whole lot has changed. And so we're going to continue with our paper trading portfolio, or constructing our paper trading portfolio. Hey, Lise, good to see you. So how are we going to go about doing that? Well, first thing today, on a down day like this, one of the best advantages that this gives us is that we get to see which stocks were strong relative to the market. And those are the ones that we really want to pay attention to, because chances are they will remain strong since nothing really fundamentally changed in the market. When the market bounces back up or moves back up, then those relatively strong stocks should keep their relative strength, and they'll outperform and they'll go up even further. It would be a different story if we had broken below the EMA 8 then. We still had relatively strong stocks. Well, the market could continue down to the EMA 20, and then even those relatively strong stocks would still move downwards. Then maybe it'll bounce off of the EMA 20, and then those relatively strong stocks would move upwards. But in terms of timing, since we did hold the EMA 8, right now, when I'm starting out constructing my portfolio, I do want to look for those relatively strong stocks. So I have a slot here for morning payouts. I did do another morning payout trade. The one from yesterday made a tiny bit of money. So basically just barely over break even. So nothing really to speak of, but I did put in a new position for the morning payout trade. So that one slot is occupied. And the next one, I want to have one, maybe two, but most likely just one because I want to spread these out in terms of time as well. I could decide to go into two today, but make the hold times very different to start staggering things out. But that is taking a little bit more risk if I do it that way. So really, I'm just mostly just looking for one. So I'm looking for the one best long opportunity that I can find today and that I'm super excited about. If I'm not super excited about it, I'm not just going to take the best one that I find. It's not the best of the bad. That's not what I'm looking for. I'm looking for a really good stock that I'm excited about. Thank you, Bernadette. Thank you very much. So what am I going to look for? I'm going to do things slightly differently, slightly different order today, because the background stuff, it didn't really change from yesterday. I'm still bullish on the market. TLT didn't really move that much. The VIX environment's still pretty much the same. Again, if I go in that, so I'm not going to spend the time to walk you through you guys through all of that. I think you'd rather see the meat. So just say we already did our homework. We already did our due diligence on that part, and the market, we're still very bullish on it. Well, I should just say bullish. We're still bullish on it, and we're still looking for a bullish opportunity. So rather than looking at my sectors first today, which is what I would normally do, because we had this down day, and it was pretty widespread, like a lot of stocks were down today, not just a few sectors or mags or anything like that. So I want to first look for things that were strong relative to the market. For now, I'm only going to stick to S&P 500 stocks. That's where the institutions play the most in, and they will play in other large cap stocks as well. But I want to be where they're most concentrated. That's where my strongest edge is. So I'm going to go over here to Stock Fetcher. I'm going to create a new filter, and Tim is suggesting SOUN. I can take a look at that in just a moment. And first, I want ones that closed above yesterday. Okay, so I want ones that went up today. The market went down. I want to find stocks that went up. Of course, I want them to be part of the S&P 500. I already said that. So we'll get that in there. And I want them to be a green bar. I don't want them to have gapped up and then come down, or traded up and then traded down, or opened and then gone down, closed somewhere. I'd rather that they're a green bar. So I'm going to do close greater than. You know what? Let me just do this first, because I want to get a count in the S&P 500 stocks, which ones actually went up, or how many went. So 125 went up. That means roughly 375 went down, unless some of them just happen to be perfectly zero, but that's going to be very few, if any, cases. So that's perfectly 1/4 of the S&P 500 went up, and 3/4 went down. So definitely the downward movement was widespread, and these 125 are already exhibiting a lot of strength versus the other ones. So I want to do close is greater than the open, because I want a green bar, and see what that reduces it to. Reduces it to 80 results. And let's see if there's anything else that I want. I want it to be above the MA200. Okay, so close is greater than MA200. Okay, let's take a look at that. And I probably even want it to be above the MA50. That's not as critical, but I'm going to throw it in there just to see how many candidates we get, MA50. Okay, so it took away 15 of them. So that's a total of 42 stocks. That's about 10% of the S&P 500. And that's not bad. I've reduced it significantly. So these are the ones that are specifically or are most likely in a bullish trend or a bullish pattern. At the very least, they're above their major moving averages. They did show a green bar today, meaning that they were bid up today. They wouldn't sell off at the open. And they closed higher than yesterday. So there's some movement upwards. Can't really call it momentum yet, since we're only looking at a single day. If I wanted to, I could say close greater than close 5 days ago or 1 week ago. Let's see if that reduces any. Okay, 31. So they took away 11 of them. That one's not as critical to me at this moment, so I'll take that out for now. We'll just comment that out. Okay. Sound, Amazon, NVIDIA, MVT. Okay. Let's go through. So Amazon, NVIDIA are definitely on this list. I did look at both of those earlier. I did like Amazon or NVIDIA a lot yesterday, but obviously didn't take action on it. And actually earlier so I actually took positions in the last hour of the session. I took positions in Oracle and Amazon. Okay. Is Sound on this list? Sound might not be an S&P 500 stock. And same with NVT, I'm not sure. Yeah, Sound is not an S&P 500 stock. And MVT. MVT also not. Doesn't mean that there are bad choices, but I'm going to look at the S&P 500 first. NVT. Okay, this is chopping sideways. Okay, so I'd want to see that EMA 8 moving definitively upwards before I got interested in it. And then SoundHound, I think. Yeah, SoundHound. That is moving upwards. But this is, the opportunity was back here. So this is not a great timing in terms of entry. All right, so let's take a look at our list that we came up from StockFetcher. I'm going to go ahead and download that and open it up. And then get it into TradingView so I can view them easily. I can look at it from here too, but it's a little more difficult to see it this way. And I don't think you guys could see these very well at all. So I'm going to go ahead and just do it from here. And I made a list earlier today. I'm just going to replace it. Okay, and then we'll run through these real quick. And we should be able to eliminate some fairly quickly. Like NVIDIA, it was great entry yesterday. Nice bounce off of the EMA 8, confirm. And so today it did gap up well, just gap up really, didn't run, but it did gap up. So this is too late. I would wait for a pullback. So I'm going to remove NVIDIA. Intel, same thing. Yesterday was the opportunity. Today's not terrible, but yesterday would have been better. Amazon, you can see that I put a debit spread right here, breaking above its MA50 quite strongly. That's very nice. And then I think we can find something better though. And I want to stick to the patterns that I've taught you guys just so we don't confuse ourselves. So Oracle, there you go. So this is the beginning of a longer-term trend. And then the short-term trend just beginning to revert to the same direction as the long-term trend. That's why I'm interested in Oracle. Okay, so I'll keep that on the list for now. HPE overextended. CSX. Not too bad. Not too bad. You could say that pulled back to the EMA 8 and then barely confirmed. Okay, so we'll keep that on for now. Is Palantir in the S&P 500? It's clearly a very followed stock, but oh yeah, it is. Okay. Palantir, yeah, it should be on our list. PLTR, not on our list for some reason. MA50, MA200, close above yesterday's close, green bar. Close greater than open. Yeah, I don't know why that's not on our list. We'll add it on PLTR. Okay, Pepsi. Pepsi, I took a trade to the downside today, and boy, did it egg in my face. We'll see what happens tomorrow. So I'm not quite interested in Pepsi yet at the moment. To alongside, MRK is really interesting. I also took a long trade in MRK. I actually, based on what I'm seeing right now, I'm liking it a lot. Probably the best one that we've seen so far. ANET overextended. AMAT looking good. Altria in a trade already. Albemarle, gap up. By the way, that we talked about that yesterday also. I was looking good. Nice little gap up today. Johnson & Johnson, nice trend, but we would wait for a pullback. JP Morgan, neither here nor there. Morgan Stanley, probably the same thing. Yeah, we were either pull it back to the trend line or a break above. So neither here nor there. GLW looking great. Does not really giving us an opportunity for entry though. Etsy, good. Pull back to the EMA 8, bounce off of it. It's not, this is more like a Roger Scott A-line. It's just straight up. Okay. Versus what I've taught you guys is you want something where, it changes directions to match the longer term trend. So this is more of a Roger Scott style stock. So I'll remove that. EA, not quite yet. VST, I don't like how that volatility really crunched down though. Also, EA is something might be going on with EA. Huge bar, and then this is, if this was going on longer, I'd say that looks like a takeover candidate. I don't really know what's going on with the EA though. Maybe it is a takeover candidate. No. Oh, going private. Yeah, going private. So that pretty much takeover or going private, very similar. VST. VST is starting to look really good. Okay, a little move up. Okay, I'd be a lot more interested if this was maybe, did we talk about this already? I feel like I've talked about this already. I'd be a lot more interested if it was a stronger trend on that MA50. But this is a reversion to the longer term trend. Okay. MNST, a little too far. Netflix, not really a pattern I want to talk about. CEG, overextended. GEV, break above its MA50. So that could be interesting if you get at least one or two bars where the low is completely above the MA50. Then you have a change of trend. So GEV could be about to get very interesting. BK, nothing. So all those financial stocks we've seen so far came below their EMA 20 and just started chopping right below their EMA 20. So not interested in any of those yet. Eli Lilly, a little too strong. NRG, chopping sideways. Teradyne, not bad. Goldman Sachs, same thing, except a little bit stronger than those other financials that we talked about. First Solar, excellent trend right here. Pull back to the EMA 8 confirmation yesterday, continuation today. Still not too far, so we could consider something, but you can see that in my portfolio, I do have a long debit spread that's doing very well, expiring next Friday. So I'm going to take that off since it's not perfect timing. Yesterday was better. Win almost bouncing off the MA50, but I would want to play this as that EMA 8 reverting back. So if this is a real bounce, it hasn't confirmed yet. It's got to get above those moving averages right there and close above this. So not confirmed yet. Lamb Weston, too strong. Amgen, looking similar to Merck. Okay, so not looking bad at all. EXPE, if you're in my GEX Trade Terminal Masterclass, we put on Iron Condor right here. That's doing amazing, expiring tomorrow, and very, very optimistic about that one. Take that off. STT. Another financial doing a lot better than all the other ones we've seen so far. Very, very wicky though. So I'm not too interested in that. DLR. Not at this moment. Right? So this could be more of a Roger stock. No, I mean the MA50s slipped down. MA200s, no on DLR. STLD, nice trend. STLD was my pick 2 days ago, or sorry, 2 days ago and yesterday. Early entry confirmation yesterday that, but they don't have very liquid options, unfortunately. HallX, too wicky, way too wicky, way too, like this is a lot of volatility and going very little direction. So not too interested at that. COR would have been interested 2 days ago. PFG, nope. DGX, nope. LH, interesting. Break above the MA200, pull back to test and consolidate sideways back above the MA200, but just in this consolidation period. If this thing, well, when this thing breaks its consolidation, and if it breaks up to the upside, it could break up really, really hard. The trick is trying to time when that could happen. So if you went into something like this, when you don't know the exact timing, you can't do anything that time decay would hurt you because you don't know exactly. It could be 2 weeks, it could be a month before this thing breaks out. And so if you wanted to take advantage of this, then what you would do is very short-term iron condors around this, because if it breaks out, you're going to lose on that iron condor. And or you pick a direction and say, hey, I think it's going up, I think it's going down. I mean, in the short-term trend here, it's going up. That MA50 is up, even though the MA200 is down. So, and we did already get a mean reversion. That EMA 8 pull back, go against the MA50, then revert back to the same direction, and now it's going against it again. And so you would wait for that. The perfect timing would be when that EMA 8 starts to move up again. But if you didn't want to put it on your watch list and wait because you might miss it. I miss things from my watch list all the time. I need to be better about looking at my watch list. But if you didn't want to do that, then you could just put on a debit spread right here and just go a little bit below. Just say, it's so cheap though. Never mind. If it was a higher price stock, if this was 10 times larger, like $40, then you would just put a debit spread right below it. And then it doesn't matter if it keeps chopping because you just collect on that time decay. So I'm going to delete that. I'm surprised that's part of the S&P 500. That's crazy. What's the market cap on this thing? Michael Guy says LPTH. I don't know. LPTH. I think that was a while ago when he commented that. LPTH. S&P 500, yeah. Market cap, 23 billion. Okay, all right. They just issued a crap ton of stock, I guess. All right. LPTH overextended. Today's movement was way too high. Okay. And then MCK. MCK looking good. We must have identified this yesterday. But this, I mean, it didn't move that much today. So today would be, or off of this bar would be an acceptable entry as well. So we can consider that. And PLTR. PLTR, a little messy in terms of its wicks lately. It was much better over here. This is kind of really choppy, messy, barely moving upwards. I do have some debit spreads on it. So I'll take that off for now, just because we've seen things that are a lot cleaner. Okay, so I've narrowed my realm down to 4 to 8. We've got a few tech. We've got a few healthcare. These are tech, this tech also. And then Teradyne, I think it's also tech. Let me make sure. Automated test equipment for semiconductors, yeah. And then Altria. Altria, I'm already in a trade in there, so I'm just gonna remove Altria. Okay, so we've got tech and healthcare, basically. So I want to set an alert. Yeah, I do set alerts, but I don't know, I still miss them because it's easy for me to ignore an alert because I'm doing so many things, or I might be on a webinar or something and then I just end up ignoring it. Or I see it and then I know that the timing isn't perfect. And so I say, I'll wait and look at it later, and then I end up not looking. I need to be better about my watch list and my alerts. Okay. So do I want to be in healthcare or do I want to be in tech right now? Okay, so that's the biggest question. And if I only have one slot, so if I had two slots, well, I do have two slots, but if I want to go in both at the same time, then those sectors are different enough that I actually might be okay with going into both sectors at the same time on the same day. Okay, but let's take a look at XLV. XLV has been doing well. It broke. So, okay, so that now it's making a little bit more sense. The XLV was not doing very well, but over here, over the last week, it broke its trend, its downtrend. It was going down, then it went sideways, and then it broke out. And so what we saw with those healthcare stocks that we identified that we're kind of interested in, they broke above their MA200 also, and then started to pull back towards their EMA8, which made them interesting candidates. And so it looks like the whole entire sector is doing that. So healthcare might be catching a bid here. So I would not mind at all being in healthcare. Let's take a look at tech. Overall tech is just strong uptrend. So over here on these trending, I would look for nice trends and mild pullbacks. Okay, and on the healthcare, I don't mind trading a breakout or pullback after a strong breakout. And I'm pretty sure everything that we chose basically fits those two patterns. So that's not going to help me too much. So let's go and take a look at these individually. Let me remove all my own notes for now. So we did end up closing just below that quarter to date VWAP. I prefer it to be above, so that's one mark against it. Okay, and now I'm nitpicking right now because I only have one slot and I have 7 candidates. and I want to pick the one that I'm the most excited about. And so right now I'm looking for reasons. I'm being super nitpicky, and I'm looking for reasons to not buy it. Okay. It's like I have this beautiful, perfect apple, and it's perfect in every way. It looks bright red, it looks delicious, and I go, oh, there's like a 5 millimeter yellow spot on it. It's like no one would really care. Right? You would eat the apple and you would enjoy it. But since I can only pick one or maybe two, I need some way to discern between them, and so I am going to nitpick. So right here, one mark against it is that it's closed right below that quarter to date VWAP. And I like that it is one of the few patterns, I think, one of the few, if maybe the only one, where we actually got that a clean, distinct reversion back to the longer term trend. So that's a plus for it. We had a high volatility here, compressing volatility over here in terms of realized volatility. This might even be a maverick. This might be a maverick. Let me see. Yeah, it's a maverick. Okay, so that's another plus sign for it. I like that, the fact that it's maverick. Let's take a look at CSX. CSX is more of a continuation in that MA50 isn't that strong. Okay, so this is a recent bounce off of the MA200. So I'm going to remove CSX. I'm going to take a look at the tech ones first. So AMAT. Okay, this barely qualifies. For a single day, it chopped sideways, the EMA8, and then it started to go up again. So technically, it does qualify as a pullback, or a reversion to the longer term trend. That MA50 is up, but it very recently went up also. It's not that strong yet. And this volatility is expanding, right? So these bars, in other words, these bars are getting bigger and bigger. If I throw an ATR study on, okay, we can see that ATR is rising up during this period. Not that that's necessarily a bad thing, but if it stops rising or flattens out, then that's not great news for my options. And in terms of ATR, we are sort of getting up there. We are kind of high, historically high, actually. So I'm going to pass on AMAT. Again, I'm just being super nitpicky here. Teradyne. Okay, so Teradyne, much better in terms of that MA50 trend. That MA200 trend is starting to come up. We had a nice, beautiful short-term reversion to the longer term right there. And then again, a single day baby move. And so we see that same volatility showing up right there. And we're seeing it, we do see it in Oracle also, right? Gap up, crazy volatility. That was earnings. Teradyne, did gap, not to nearly the same degree because it didn't have earnings, but it does have this expanded volatility on the way up. Let's check its ATR chart. ATR chart is high. How about on Oracle? High, and coming lower. Okay. Very high, actually. Really, really high. That's a huge gap up on earnings. That's why. So I'm not surprised that it is coming down. Okay. This is just a much cleaner short-term to long-term mean reversion. And it actually spent some time going against the longer-term trend versus a single day on Teradyne. So I'm going to go with Oracle for the tech stuff. And then we'll take a look at Merck. Merck is that is beautiful. Really caught a bid for 2 days. Institutions are interested They're very interested. They're bidding this thing up. We have those 2 days of spiking volume as well. They bid the heck out of this and got it above the MA 200. And then they stopped. Okay, they allowed the price to float back down to the EMA 8. They could allow it to float down to the MA 200 or even the MA 50, but today's action suggests that they're not. And I do have a little bit higher volume today than the last couple of days. Okay, so this isn't super confirmed in terms of institutional accumulation, but actually that is the accumulation pattern that I've been telling you guys about for the last few weeks. Not super clean, but it is there. And these two huge bars are a clear indication that institutions are actually playing around in this stock. So I really like this, even though I didn't get a green confirmation bar. I mean, yeah, it is a green bar, but it didn't close above the previous day high. So it's not a confirmation bar. It's a green bar, not a confirmation bar. If I was more conservative, then I would wait another day and see if it closed above. But given that I have 0 positions on right now, I might be okay with a slightly early entry. Plus, I'm doing everything after hours, so I could be more judicious in my entry tomorrow morning and say, hey, maybe it opens up here and I'm comfortable. So I'm going to keep this on my list. I actually like Merck quite a bit. A little bit more than I like Oracle. That was $100 earnings bump for Oracle, which bumped Larry Ellison's net worth up by $1 billion. Yeah, that was a huge move. Yeah. Yep. Okay. Amgen, similar. Okay. 2 huge bars right here, the same as we saw on Merck, and then floating downwards. Okay, it's not as clear that these 2 bars are pretty good indications that the institutions are playing here. But I'll go back and check. Oh, this is Liberation Day, so that doesn't really. I'll check June in Merck as well and see if they had these 2 huge bars over here also. But this is not nearly. If you showed me this, I wouldn't automatically say, yeah, there's institutions accumulating this. It may be just because funds, they have their allocations, or ETFs, they have their allocations, and they need to keep them consistent. So, for example, if XLV does this, then that money has to get distributed to all the components within XLV in order for them to maintain their balance, or their allocation percentages between the stocks. So that's interesting that institutions and the market really came in hard on these 2 days in the entire sector. I don't see those weird 2 large bars that we saw in Amgen and MRK. Yeah, I don't see them over here also. I'm a lot more comfortable with MRK. Just a lot cleaner. It's a lot cleaner. So I'm going to get rid of that. MCK, a much better reversion to the long-term trend. Longer-term trend. Not as strong of a longer-term trend. What's really interesting is that MCK never dipped below its MA 200. It is strong. It is strong relative to the entire sector. I'm not being retarded, right? They are healthcare. pretty sure they make devices and stuff. Well, drugs, druggists, dental suppliers. Yeah. Okay. Yeah. Pharmaceuticals, healthcare. Yeah. Okay. Strong, super strong versus the entire sector. Okay. So this is going to be a hard choice for me between MRK and MCK. I really liked MRK, but MCK is strong. It is so strong relative to the entire sector. Its uptrend has been intact. That MA50 did curve downward, but the MA200 stayed intact. The MA50 starting to move up along with the EMA8. So they both went from down or flat to up. And then this is the first reversion to the long-term trend inside of MCK. This could potentially go on for quite some time. So I really like both of them. How are you able to see the instructions buying because of volume? Institutions, I think you meant, because of the institutional accumulation pattern that I've explained to you guys over the last few weeks, plus the very large bars and plus volume. Okay, so retail traders generally do not have the ability to move a stock price on a large cap stock, on an S&P 500 stock. There's way too much market cap. So for something to move really strongly like this, okay, that's got to be institutional money has to be involved. You got both volume and huge price bars. If I had no volume and a huge movement, that just means it's illiquid. And for whatever reason, it got bid up. Maybe institutions were involved, maybe not. Okay, but retail traders, if I say, I've got a watch, I want to sell it for $1,000, and then the next person up goes, I'll buy it for $2,000, and then the next person says, I'll buy it for $3,000. That's not liquid, because just the guy who buys it for $3,000, he's probably going to have a hard time finding someone to buy it for $4,000. He might even have a hard time finding someone to buy it for $2,500. He might have a hard time finding someone to buy it for $2,100. He knows there's someone who is interested at $2,000, but that person may or may not be there anymore when that guy is ready to sell it. Okay, so because of liquidity, if there's not a lot of liquidity, prices can gap and move really big like this. But if there's liquidity, if you have millions of the, where is it? Volume, that's right. 12.7 million average volume, 9.45 million today. That's not retail, guys. And huge movement like this. So there's liquidity. And if there's liquidity for price to move really high, there's got to be a large amount of money involved. And if there's a large amount of money involved, that's got to be institutions. It can't be retail traders. Okay? And that's how we know. Okay. If we take a look at MCK, I think I may have talked myself out of Merck, because we do see this as well. Okay, so there was an institutional accumulation right here. It broke out already, then it pulled back to the EMA 20, and now it's ready to bounce. The accumulation happened earlier in MCK, and it's not too surprising. There's a really strong trend here. Okay, so it's a better candidate. So I like MCK. I like it. So I'm going to go with MCK over Merck. Merck end up with other pharma because Trump said no tariffs on drugs. Oh, okay. I missed that piece of news, but that's probably the entire sector then. Yeah, thank you. Look at Gamma on 12/24 on Merck or on, let's see. Where's my Gamma? Merck or McKesson? Okay, Merck, nice big gamma at 90. Nice big gamma at 95, nice big gamma at 100. So 90 in focus, 95, 100. So Merck, plenty of gamma exposure supporting an upside move. And then, but Dan was talking about specifically the 24th. It looks more like, if we're, maybe he meant McKesson, but looks like more like this, the 17th actually. Yeah, still big at 90, much less above. So at the very least, a near-term objective, next week objective could be 90 on Merck. And then let's look at MCK. Dan was talking about Merck. Okay, thank you. Let me go back to Merck then and look specifically at the 24th expiration. Yeah, there's not much there. There's a big, I guess, down at 80. Okay. So that means if I go into Merck, I'd be interested in a shorter term trade out to next week. It's 10/17. Okay, MCK. We got the same thing, support here at 750. Didn't realize it's such an expensive stock. That's okay, we could do a spread. It's below. It's below. Nothing really big above it. So nice to have that support, but nothing, basically the market maker wouldn't be helping us on the way up. So if I look over here at McKesson, I do 750. Oh yeah, I mean, that's great. If I did a debit spread at 750, I'd be 100% comfortable with it. That'd be really, really good. Let's price that out versus Merck. So 1 week trade, MCK 750. Probably not going to get to, that's super wide bid-ask spreads. Yeah, there's no way. Even at the money. Why is it so wide? It's ridiculous. Come on, McKesson market maker. How are you going to do any business? This guy's not going to make any money. No one's going to want to buy his options. Okay, let's take a look at Merck. Merck, we're also saying out to the 17th because we wanted to avoid that big gamma pocket below that Dan was pointing out. I think that's what he was pointing out. Okay. And then let's take a look at, we can go at the money. If we want to be a little, yeah, I mean, we're so close to 86, 87, 87 we could do. $0.65. 53% in a week divided by 7. Not bad. Remember what I was telling you guys the other day, how we were evaluating the percent per day. and how it's difficult to get anything above 5% per day. So this is good. This is really good. Assuming we could actually get it at 65. It's a little bit wide also. That's not too bad, actually. It's not bad, but when we spread it out, it becomes a wider. Yeah, I'll take a look at PFE, LLY, and UNH in just a moment. Okay, I'm comfortable if we can get in at 65. I'm comfortable with that. $500 allocation, 7 of these or 8 if I want to go slightly over allocation. I'm okay with how much over would I be? $20, that's fine. Yeah. Okay, so I'll throw that in. And then I have to decide, do I want to space this out or do I want to go into that tech that we looked at? And Oracle, I'd probably only be out to 1 week also. So I'm not going to do Oracle today. So let's take a look at the ones that you guys want to look at. PFE. Definitely not interested in this. Okay, this is much worse than the ones we picked, right? The MCK, the MRK, because it caught the bid also because of the entire sector, but did not really hang on to it at all. Whereas the others pull back to their EMA 8 and then chop sideways or were bouncing off of it. This fell right through even the EMA 20. So weak relative to all the ones that we've seen so far and not interested. Okay. And also red today, whereas the others were green. If we take a look at Lilly, our earnings coming up for MCK, we'll take a look at that. I think we saw something November, but Lilly is strong, but it's not giving you a good entry point. So unlike the others, it went up and it ran up. So it definitely has relative strength, but it's not giving you a good opportunity to enter. So you would wait for this to flatten out or to pull back to the EMA 8. But yeah, Lilly is definitely stronger than the others. Versus the McKesson, though, it only just barely went above its MA200. So it's not stronger than McKesson, I should say. In the last couple of days, it has been, but not overall. It's not stronger than McKesson. No, it's looking pretty good. Okay, versus MRK, you see that MA50 is a nice, starting to get a pretty good angle upwards on it. Nice bounce off of the EMA8. Lilly, you're only just beginning to curl upwards on that MA50. But still, yeah, if this pulls back and gives a good entry, I would have no problem with Eli Lilly. And UNH still needs to get above its MA200. It could trade up to its MA200, but yeah. And notice how it didn't get that bump up with the rest of them, right? When the Trump made his tariff announcement, then it didn't get its bump up on that. So UNH is kind of doing its own thing. And I'm not interested in that thing unless it's above MA200. Okay, let's see. MCK earnings, yeah, beginning of November. It's a little further out, right? So nothing that would interfere with any of the trades that we talked about today. AMD. AMD is gap up, moving higher, might be petering out over here. And generally, they'll have trouble continuing its move. So it had a huge move on Monday off of some news. It sold off a little bit. It's got bid up a little bit yesterday and then kind of flat. And that's what we'll expect. So for example, MP, it had its big news. Okay, gap up, traded sideways for a couple days, gapped up again. Limited motion after that. Yeah, overall, is it up a little? Yeah, it is up a little. But after that news gets priced in, then you see that activity drop tremendously. Okay. So AMD, I'm not really interested in this because I don't have an edge. Meaning that, why don't I have an edge? I don't have, could it gap up again? Who can answer that? It's kind of a 50-50, right? Some of them do, like MP, some of them don't. Like, could it go up? Can it run up from here? Yeah, some of them do, but most of them don't. Most of them will consolidate or pull back, and that would be a better entry point. So it's sort of it's a gamble. I don't have an edge. And in order for me to take advantage of an edge, I have to be able to do it over and over and over again. So that means I have to be constantly looking for these gap up stocks and then hoping that they run. And I need to have some sort of data backing that. And I don't have that data, so I wouldn't be trading it. And if I went through the data, I would suspect that there's not a strong enough edge in that for me. Or at least if there is a strong edge there, it has a low win rate. And so you have a low win rate, but maybe very high profit potential. And most people can't handle that. Most people will give up on their system. If you're only winning 20, 30% of your trades, and you get loser after loser after loser after loser, and you go on these long losing streaks, most people give up. And most people can't sit through that. It's hard to take. Even though every once in a while you get that giant winner, then it's hard to take. It's hard to actually stick to your system. And actually, this is the behavior of gamblers, right? They go to the casino and they lose and they lose and they lose. And every once in a while they hit a big one and they come back a winner. And then they go back to the casino and they lose and they lose and they lose and they lose. And they can't handle it. And what I mean by they can't handle it is they will abandon a system. If they were operating using it, either they're willy-nilly doing just gambling, or they think they have a system that has an edge. But if they lose and lose and lose and lose, they will abandon their system, which means now they're just gambling. They're just willy-nilly gambling again. So most people can't handle that, right? Most people can't handle losing over and over and over and over and over and over and over again. It takes a very particular set of not only skills, but emotional mindset and type of thinking in order to do that. And 99% of people can't do it. Okay. So, and I prefer not to do it. I've had portfolios in which that was the edge, and that I've been mandated that I had to trade it that way, and I can do it, but it's not comfortable. It is not comfortable at all. Okay, trying to fade AMD. Oh, that's even no. I wouldn't fade it. I wouldn't fade it at all. Okay, so there's no so that news was substantial, right? That was OpenAI, deal with OpenAI. If that is business going forward, then there's no reason to fade this at all, because that's actual, just like MP. If the government actually buys their shares and is going to be an active investor in MP, that is real business, fundamental business changing news. It's not going to drop back down. Okay, just like LAC. Okay, news that the government was going to buy into this one. Okay, it's not going to drop back down. You can't fade those types of gaps. Okay, you can't fade that type of news. AbbVie, oversold bullish. Well, that is a very, very strong healthcare related stock. It did get that bid upwards with before it was already really strong. Let's look at this compared to MCK. Yeah, even stronger than MCK. And then it got that tariff news and then sold off a bit on it, but maintained the EMA 8. That's pretty flat. I wouldn't fade AbbVie. This would be a wait for a bullish buy opportunity. That's what this looks like for me. Sit on your hands, wait for that EMA 8 to curve upwards. So that is now reverting to the long-term trend. That's what AbbVie looks like. Molina Healthcare. Molina Healthcare way below its MA200. Okay, so we could play that distance in between the MA200. It is bumping up on its MA90 though, which could give it a little bit of trouble. And I mean, you could say that in terms of a trend, recent trend, yes, this has been steadily moving upwards in the face of this giant move downwards. So you could play this, but this is not for amateurs. Right? This is not for amateurs at all. This would be, if you know what you're doing, yeah, you could play this for if it breaks that MA90 or 100. Some people use 100, some people use 90. Okay, if it can break that, then that trend can continue higher temporarily, and then we'll see what happens up here and up here. MUX. What is this stock? What is this thing? It's going parabolic. It's hard, right? There's no good entry over here. This could have been a good entry right here. This little dip to the EMA 8 right there. But right now, that is overextended. Okay. What is this thing? Gold and silver deposits. Sale of gold. So this is gold. It's a gold stock. Yeah, and gold's been rushing upwards. It had a down move today. MUX, I think, yeah, strong relative to gold overall. But I'd be careful. I'd be careful. All right, I'd be more interested in if it pulled back to right there. 17.4 ish, 17 to 17.4, maybe 17.5. Lot B. Okay, this will be the last one, guys. Lotus Bakeries, interesting. Not right now. At this point in time, it broke its MA50 and then it retested it, and then it went down following its EMA 8. So this is not something I would be interested in going long in for a while. It's got to prove itself. It's got to get back up above its MA50, but also a lot more importantly above its MA200. Yeah. Been in it since 2019. Okay. There you go. You got some nice movement over here. 2019 just hurt a little bit from September of in the last year. It hasn't been so hot, but if it can bounce and move upwards, I would be waiting for the MA200 to break above the MA200. Okay. Yeah, bigger time frame. Yeah, it looks good. Bigger time frame. Okay, so if I go on a weekly, yeah, it's retesting its MA200. So it's got to be a successful test. Okay, successful bounce. And then since these two lows are similar, yes, it is higher. Okay, so what I would want to see is a higher high right here, higher than this one, and at least matching this one, if not higher than it. Okay, but we're a little while off from that, at least a few weeks. Say this is a weekly time frame, right? So we're at least 4 or 5 weeks, maybe even 8-10 weeks away from seeing something like that. Okay. All right. Looks like we have our position. Hopefully, if we can get into this tomorrow, I'll watch it during the day, and if push it through if it looks like it, we're at least close on the price. And if not, then we'll keep on trying. Okay. All right, guys. Thank you. Have a great rest of your evening, and I will see you guys